Welcome back, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. I'm your host, Berg. Today I'm going to show you how you can achieve super performance and achieve some massive gains with stocks BILI, BILL, and LSPD, okay? So I'm going to break down the charts on a technical theme, and then we're going to flip over and look at the fundamentals of these stocks, okay? These stocks are acting really well today. And I'm also going to go over some risk management and how these trades could possibly work out in the future for you. Okay, so other than that, before we dive in, if you haven't already subscribed, please do. You can click on the TSE logo in the bottom right hand corner of this video. Also, like the video, leave a comment. If you have any questions, I'll be more than happy to answer those. So let's go ahead and get a move on, because time is money. Okay. Okay, so the first chart that we're going to dip in is BILI, which is BILL, which is Bill.com. So what we're going to do is I'm going to go over the technical chart, okay, or the technical theme right here. Very interesting with this stock right now. I'm not going to go through all this because I'm not going to go through the prior trend stage and all that, because I've already explained a lot of that. I'm just going to go through a quick analysis and then go over what could possibly happen with this stock, okay, as to what I see. So other than that, we are in this stage 2 accumulation, but we are putting in this third base with a tertiary base. And we do put in a double bottom right here, okay? There is no handle with this double bottom, but I expect it to be if it gets up to these new highs, or these all-time highs at 195.95, okay? Somewhere around that. Maybe it might produce the handle right here as we're talking, maybe within the next week or two, whatever. But let's say if you're going to take this trade, okay, you're going to place your stop at $165.47. That's where I would put it for a 6.5% risk, okay? So practically what we're going to look for is we're going to look for 2 times the reward, or 3 times the reward of that risk, okay? So if we're buying here today at $178, our risk is at 6.5%. Well, the movement on up to the new highs would be about 9.58%, okay? Well, that's not great reward to risk, because there's not even 2 times. 2 times 6.5 is about 13%, okay? 3 times that, and you got about 19.5%, somewhere around that range, okay? So more like 20%, and that's what you'd be looking for, okay? But other than that, if you're buying right now, like I said, place that stop at $165.47, 6.5 risk, okay? What could possibly happen with this stock? Matter of fact, you know what? I'm going to take it to this level here. Let's do this right here, and let's go to the Stock Charts ACP, which is the advanced charting platform for this here. And let's go look at, let's go see here as to what can happen with this, as to what I see. So let's go annotate this chart a little bit more here. We're going to draw the trend lines. Okay, we're good on that. So practically what could happen here as this stock travels, let me see here, hold on just 1 second, let me get back right here, and let me kind of bring this right here. That way we can draw it out a little bit easier. It's a little bit better of annotation right here. So let's go ahead and do the trend line here. Okay, so practically what could happen here is we could pull back, and create this handle, okay? And this handle will be, kind of going, well, if I can get this here. Okay, I don't know why that's doing that. Kind of like this right here, kind of forming this type of movement right here, maybe even, kind of developing something like this, or maybe it can blast off right here and move up to highs, all-time highs, get to new highs right here, and form the handle from here, okay? Maybe something like this as well. This is what you're going to be looking for within the handle, but you want nice tight price action within that handle, and then it'll kind of, like that consolidation period right there, and then from there it could possibly take off. You never know. This is just technical analysis. This is chart reading within itself, but other than that, if you're placing your stop down here where I said at 165. You know, if it does touch that, go ahead and get out. Obey your stops, and that's how you manage your risk, okay? But other than that, I mean, this stock is looking great. If you look, you know, we got tons of accumulation here within the stock. Nice gap up right here. Comes back, puts in work around this 150-day moving average and also on that 50-day moving average as well. As you can tell, huge volume. I mean, huge demand here. Nice volume dry up, or you know, decrease in volume. So other than that, I mean, the super pivot was breached at $170. So if you do take this trade, you know, expect it to kind of pull back, maybe pull back and then move back up. Okay, so that's what we'll be looking for with this stock here. So let's go ahead and get a move on to, let's say, BILI here, BILI, which is Bilibili, and I had to look at that there. But other than that, so what we're looking for with this stock is, of course, we got this nice base right here. This is a third base, another tertiary base. This is a nice double bottom, or you can even say rounding bottom, but this is kind of like a double bottom, kind of a handle here. This one's working out close to that super pivot at $120. So once that's breached, you know, you might want to put on the trade, okay? Because that would be a really good entry point. Because when you're doing stocks, when you're trading stocks, it's all about timing. Okay, you got to time your entrance properly, and that's what it all comes down to. Practically everything in life is timing, okay, and that's just how it goes. So other than that, we do have this nice tight range within the within this base and pattern. We do put in work off this 50-day moving average and also this 150-day moving average, as you can see right here. And boom, we're breaking out of this little nice consolidation phase that happened for, you know, 3 weeks or so, 2 or 3 weeks. And not only that, we're pretty close to 52-week highs, so we do have volume decreasing within this pattern, within this base, which is excellent to see. We do have some nice accumulation. I mean, as you can see right here on these days right here, I mean, really nice accumulation, okay, coming in. So there is institutions buying in here. What we need is we need to see some more volume increase coming right here, especially breaking that $120 barrier. But like I said, heavy demand off this 50-day moving average. That's good to see. Nice tight price range right here, so low volatility. And so how you're going to manage your risk is you're going to place your stop at $107.97. Okay, this is going to be an 8% risk. Okay, so your reward, what you're looking for once it breaks through that $120 barrier, you're looking at about, you know, at around 30%. If it gets up to all-time highs or new highs right there, you're looking at about 30%. So that's about, you know, nearly 4 times your reward to risk ratio. That's what you're looking for. So nearly 4 times your risk, okay? And so what could happen with this stock, if we go and look here, let's go do some drawings here on this. So practically what could happen with this stock here as it's rounding out and encroaching that $120, you know, we could possibly get a small pullback here, maybe to the 10, maybe to the 5. But other than that, I mean, this stock, I mean, be prepared, because this stock could possibly, more than likely, break out to the upside right here once encroached at 120. But other than that, if it does and it moves up here, so it blasts off here, let's say it gets up here to around 150 or so, $150 level, be prepared for it to kind of pull back, consolidate right here, and then, you know, kind of form maybe just a little handle or something, you know, go through a little consolidation phase for a little bit, and then potentially, you know, break out from this consolidation phase to the upside and make new highs, which that in the term will give you, you know, your reward of over 30%. And that's what you want to see. But if this thing starts breaking down from here and gets past this this low right here, you can practically call this trade dead right here. This is going to be a dead trade, because once it gets past, well, that's not what I wanted, but once it gets past that low right there of this little consolidation phase, that's just telling you that there's not any buyers in there. There's more sellers, and this could possibly reach, you know, these lows at $84. Okay, that's all that's saying. So other than that, that's not what you want to do. You don't want to hold on to losses. Never hold on to losses. Just cut them, you know, cut them short. Don't be afraid of them. Just cut them short. Okay, and that's how you save your ass in the market. That's how you be cautious and play your cards smart, or your cards right. Okay. So other than that, I mean, there's some possibilities with this stock right here. Like I said, if it does break down, starts breaking down right here, then more than likely it could get down, you know, go down that, like that, okay? So just be prepared for either side. That's when you're a trader, that's what you do. You be prepared for both sides, okay? And just learn how to swim with the current there, okay? Other than that, let's see here. Let's go to LSPD here. LSPD, which is Lightspeed POS. This one is breaking out. It broke out yesterday on high volume. But other than that, sorry about that, yes. Other than that, this one puts in a nice secondary base right here, a cup with a handle. This is being the handle right here, and it's a nice tight handle. It's really low in volatility, so low and really low contraction, or a contraction period. So not only that, it is putting in work off this 10-day moving average and the 20-day moving average, as well as the 150-day moving average within this base right here, whereas it's, you know, forming that cup. So that's good to see. Not only that, we do have volume dry up within this cup right here a couple of times, and not only that, we do have volume dry up within this handle, okay? But within this handle, as you can see, we have massive demand. We have really good buying power here. So there are institutions backing this company up right here, okay? And so if you're going to take this trade, what you're going to do is you're going to, matter of fact, before I go on with that, the super pivot was breached at $74, like I said. And it's, of course, you can see it was hit a couple of times, and the handle was just moving up, just, you know, blowing past that $74. If you would have taken your trade right here on this day, well, yeah, you'd be doing pretty good. You know, you're up nearly, you know, 5% right now as we talk. So, but other than that, what you're going to do when you manage your risk, you're going to place your stop at $71.84. This will give you a total risk of 8.5%. Not too bad, but the thing is let's say this breaks out and this gets up to new highs, and that's only 3.7%. But the consolidation range here is so tight that it coiled, that this one could just literally go ahead and just bounce and keep moving past all-time highs, and, you know, make it, you know, 15-20% above the all-time highs, you know, putting it at around, you know, near $100 or so. You know, that could be a possible chance. So, but let's go ahead and go look at this here on the advanced platform here. So practically what we could see here, kind of move this up a little bit. So what we could see here is maybe pull back to the 5 or so, to the 5-day moving average, and then maybe move up, okay, from here. If it does and it gets that 100, expect, you know, another, you know, a possibility of another consolidation, and, you know, no telling what it'll do. Put in any type of pattern. But, you know, this could be a likely outcome right here with this stock, okay? So, and it could move up really, really fast, you know, to $100 within, you know, the next week or two. Don't know that. I'm not predicting. We don't predict in the markets, okay? This isn't about telling time. This isn't forecasting. This is all about speculation. We're anticipating events, okay? We're anticipating movements in stocks. That's all we do, and these chart patterns help you anticipate and time your entry correctly, okay? They help you do that, and that's the reason why you want to follow technical analysis, learn how to do technicals, and chart read. That's all you want. Really, price and volume is where you want to be. You want to be a purist in chart reading. Really, all the other indicators out there really aren't. Really, they are just secondary to chart reading, meaning that your price and your volume are the primary indications in chart reading, And so what I'm saying is don't make it complicated, okay? But let's say if this stock does keep falling from here, let's say it pulls back, but it kind of, you know, does this number right here and then falls down to right here, surpasses this low of this little tight, you know, handle right here. Well, you could probably call this trade dead in the water. This is going to be a dead in the water trade. You don't want to even deal with it. Don't even hold on to it. Just obey your stops where I told you, and just get out when it changes direction, okay? Obey your stops, get out when that stop is hit. That's all you got to do. But if it does surpass this low, get ready, because it'll probably get back down here to around $55. That's just how it works, because this is major support right here at around $55, okay, as you can see. Lots of lots of buying, lots of selling all around that $55 level, okay? So that's where the point where it could go to if it breaks down past this low of this handle, okay? So more towards that 200-day line, okay, that moving average. But other than that, I mean, so this is kind of how you can read charts, you know, get an inference on how it can act, you know, what could happen here. Usually stocks, when they're moving up, they'll take, you know, it'll be a staircase. It'll move in staircase fashion. So you got a movement up, staircase right here, dip, boom, move back up, staircase, dip, move, and just like that. And that's all it'll do. That's what a stock usually tends to do when it's moving up. Those are just rest periods, okay? Those are shorter term traders taking off profits, you know, day traders taking their profits. Just real quick, making some money on a daily basis. That's all that's about, you know. But where you want to be is you want to be with the institutions. You want to ride the back of the institutions, because that's where the money's at. You just follow the money. As long as the money's there, boom, you're gonna ride the wave, okay? And you just got to be patient. Not only that, you know, as that stock's moving up, a good strategy is it's going like this right here, moving up. What you can do is when this stock starts moving up right here out of that base, or out of that little pullback, you can start buying when it moves up. So you want to be buying when the stock is moving up, okay? That's only logical, because if you think about it, you're buying within price momentum. You're buying in the direction that you want to make a profit in, okay? Same thing for the downside. So if it goes like this right here, all you got to do, if you wait again, it'll come back, pull back a little bit. Short-term traders taking some gains. Boom, we got some more buying coming in right here. And buy again, buy some more. So this is a pyramiding scheme, you know. It's actually what Mark Minervini calls progressive exposure, okay? You're progressively exposing yourself within this stock and moving your money into this stock as it's moving down and moving back up. You're buying right back when it starts moving back up. And this is progressive exposure, okay? It's like going to a gym. When you're going to gain strength, you're not going to decrease in weights. You're going to increase in weights in order to get strong. That's just how that works. It's the same thing with the market. You're going to increase your weight to make more, to make more money, okay? And that's just how that is. So other than that, as the stock's moving up and forming this little staircase, you can place your stop just 3 or 4 cents below that low of that little pullback. And so you place your stops right there and protect yourself, okay? And that's how that goes. And if it gets hit, it gets hit. So what? I've watched numerous stocks move up really, really fast and do that staircase fashion. They all do. But you just got to know how to move your stops, manage your risk, and expose yourself to it, okay? That's how you make money within the market. You want to hold on for a little bit longer, okay, and get a little bit more juice out of that stock, okay? But other than that, so these are the 3 stocks that I chose today just to go over. They look really well. The patterns are great. The bases are great. Stage 2 accumulation phases here. Nice volume, okay? Just, do whatever you want to do. I'm not recommending these stocks. This video is only for educational purposes. You need to do your due diligence before venturing off into these stocks, and take responsibility for your own actions, because I'm not responsible for what you do, because I'm not endorsing these stocks. I'm not recommending these stocks. I'm not telling you what to do. I'm not telling you to buy. Okay, I'm not a financial advisor. I'm not a broker. Okay, it's on you as to how you buy, when you buy, what you buy, whatever you do with your money, it's on you. Okay, nobody else. So let's go ahead and go over these on a fundamental theme. Let's see what's happening here. So Bill, we are in the computer software financial group here, provides cloud-based software that simplifies and automates back office financial operations for SMBs. They are ranked number 5 within their competitors. The composite rating is at 63. 63 is not too bad. Usually I like them around 65, but it is what it is. Other than that, the industry group rank sucks. It is one of the lowest industry group ranks. It is a laggard industry at 188 with the group relative strength at E. Yeah, not good. So there's really no momentum within this, but this stock's doing okay here. The earnings per share percent change last quarter was 33%, with last quarter earnings percent earnings surprise being at 71%. Not bad. Their sales percent change last quarter was 45%, with a 3-year sales growth rate at 56%. So their product and what they're doing within this cloud-based service, they're making sales, okay? So they're selling their product, they're selling their services, they're doing pretty good, okay? With a 56% 3-year sales growth rate, I'd say they're doing pretty well right there. They're making some money. Okay, not only that, we got 11% change in funds owning the stock, so we do have institutions in here accumulating, because as you can see, the accumulation distribution rating is a B, so that's good. And not only that, 5 quarters of increasing fund ownership. So on a quarter by quarter or a quarter basis, it's had fund ownership increase. So institutions have been increasing their positions, and there's been more coming into this stock. You know, so there is money supplying this stock. There is demand for it, okay, by institutions. Something that we want to see. You want to be swimming with those guys. That's where the money's at. Okay. Now let's go to BILI here, and of course it's ranked number 24 out of its competitors. Composite rating 57. It is a Chinese provider of high quality content and an immersive entertainment experience online. This industry group rank is really good. It is one of the top here at 36. The relative strength rating for the group is an A-, so we do have some really good strength, okay? This stock has had 2 quarters of earnings per share acceleration. We do want to see earnings per share acceleration. I like that a lot. That means that it's accelerating and getting, you know, well, the earnings per share, it's accelerating. It's accelerating to the upside. That's what you want to see. Sales percent change last quarter was 82%. 3-year sales growth rate at 63%. So this company, of course, is selling their product again. So that's what we want to see. They're doing great with their sales apparently. We do have a 27% change in funds owning the stock and 8 quarters of increasing fund ownership. That's good to see. We want to see more funds increasing the ownership on this, okay? So we're swimming with the institutions on this stock as well. The accumulation distribution rating is a B-. It's still good, okay? So we do have accumulation within the with institutions. Let's go look at LSPD real quick, and which is light speed POS. Composite rating being 59. They are ranked 13 out of their competitors. Canada-based company provides cloud-based point of sale software for small and medium-sized businesses. Okay, their industry group rank sucks at 142, with the relative strength rating for the group of being C. Not so great. They do have 1 quarter of earnings per share acceleration. That's good to see. I wish it was 2 or 3, but that's okay. But let's go look at their sales. Sales percent change was 127% last quarter, with 55% 3-year sales growth rate. Okay, really good to see. Like I said again, these guys are making sales. Okay, so they're holding that in. That's a good thing to see. People like their product, okay, or whatever they're doing here within the point of sales for small businesses and medium-sized businesses. So they're making some money right there. Okay, their product's selling. Good to see. 14% change in funds owning the stock, with 8 quarters of increasing fund ownership. That's good. Another again, institutions in here with this stock, with accumulation distribution rating being a B. Okay, so we do have accumulation. There are institutions within this stock. Like I said, you want to be swimming with those institutions because they're supplying the money. They're the big money. Okay, that's how it works in stocks. money talks, BS walks, okay? And that's how that goes. But other than that, I'm going to go ahead and leave this video off right here. Before I end it though, thank you for supporting the Speculator's Edge. I hope you enjoyed the video, found the information valuable. I'll of course be a little bit more uppity up. I'm still kind of a little bit in pain with my back here, so it kind of drags me down a little bit, but hey, it is what it is. I'll get over it and I'll get through it. So I'll push past all that, and it is what it is. So no pain, no gain. But yeah, anyway, that's not necessarily true. So other than that, please subscribe if you haven't already. Drop a comment. You know, if you have any questions, leave a question. I'll be more than happy to help you with it. Also, I post a link down to my down below this video to my Patreon site. Go check that out. Go subscribe to one of my tiers. You're going to find a lot of information. I'm going to be giving you a lot of information. Yeah, I mean, you're going to be making some money, okay? It's serious. And so anyway, other than that, I want to thank you again for watching. Here at TSE, we trade in the present, study the past for knowledge, and follow the process of trading to build our future, okay? So thank you again for watching and subscribing and supporting TSE and myself, and opportunities awaits, my friends.